Hey everybody, thank you for joining us for the ACA Small Business Bootcamp and Resource Collective on this Monday morning, August 24th. I'm Robert Theobald, the Small Business Ombudsman and Vice President of Small Business Services for the Arizona Commerce Authority. We're excited to have this session today, and we couldn't have this session if it wasn't for our community partners. This is just a small list of all those that have helped with their expertise in these webinar sessions over the past few months. We couldn't do it without their help. So real quick, the Small Business Bootcamp and Resource Collective, as many of you know, is designed to help small businesses work through the COVID crisis and return stronger. It's a statewide initiative supported by our community partners, and it is a boot camp that's going to continue on through September. We started back in April and have continued on with many sessions. All those previous sessions can be found at the Small Business Bootcamp website. We've recorded all the previous sessions. They're available to go back and watch and also download the materials that were with them. And you can also register for upcoming sessions on that same site. Also on that site is our Resource Collective, and this webpage is set up for all those community partners where we share the information that they have provided for small businesses. Many of them put together guides and tools to help small businesses as they work through this period. This is just a quick sample list of many of those guides that are available for you to download or view on the Resource Collective, ranging from employment insurance, safe retail, restaurants, construction, manufacturing. There's a ton of different guides on there. So this week's sessions, we've got a great week. Today is a special session for Paycheck Protection Program. Where are we now with Carrie Ann Todd? We're excited to have her with us again. Tomorrow is the ABCs of Business. It's part 2 of the 2-part series. And it's going to be focusing and going through the business model canvas. Great session if you're looking to create a business plan going forward. Even if you're open, it's a great tool to reevaluate your business and know where you're at. So join us for that session tomorrow morning at 9 a.m. And then Friday morning is leveraging Instagram for your business. So great marketing with Amanda, who's been with us before. Again, all these sessions take place at 9 a.m. A special note about Fridays is we are unable to record that session. So you'll definitely want to be here live on Friday morning, 9 a.m. for that Instagram session, because we will not be able to go back and review it. So quick updates. Last week, we saw 2 updates on grants, a small business rent and mortgage relief grant. Local First is managing that for the state. Maricopa County Small Business Grant version 2.0 was released last week as well. And then if you need information on the Economic Injury Disaster Loan Program, that is still active and available. You can go through the SBA website to get more information there. Quick reminder for the ArizonaTogether.org website, which is the state's COVID-19 information and resource webpage. And this is our small business, or actually our Arizona Business Resources website for COVID-19. Many different resources for businesses related to the pandemic. You can go on there and find all kinds of information, and we update it as often as new information is received. Just some quick notes on programs available for our small business owners throughout the state. Through the ACA, we have our small business services, and we can help you navigate with the SBA and the small business development centers, along with SCORE and other small business resources that are available. Our workforce division can help business owners, whether looking to hire employees or provide additional training or train up. There's programs to help with that. And our Arizona MEP, our Manufacturing Extension Partnership, is a top-notch program for helping and working with manufacturers throughout Arizona. Another thing, if you're just interested in pivoting and starting a new business or a new business line or expanding your business, we have a small business checklist that's an interactive resource guide that helps people with their licensing information, whether it's local, state, federal levels, knowing what to do to help get licensed and registered in your area. So again, today we have Carrie Ann Todd from BeachFleischman. She's been with us a number of times before on PPP, and she is an expert on the subject and does a great job presenting. So we're excited to have her back with today's session. So Carrie Ann, I'm going to go ahead and turn time over to you and let you get started.
Thank you, Robert. I'll work on getting my screen shared here.
While you're doing that real quick, everyone, please use the question and answer button at the bottom of your screen for questions. Carrie Ann does have time scheduled in for some Q&A at the end of the session. So if you have those questions, again, drop those in the Q&A box, and we will try to answer all those we can.
Great. So thank you, Robert, and the Arizona Commerce Authority for having me again today. Honestly, I kind of thought we'd be done with all of this by now, back when the PPP started in March. I know when we were looking ahead, you know, back then it was an 8-week program. Everybody would have had it all figured out by now. Everybody would know what they're supposed to do by now, and everybody would already have their forgiveness application submitted, and we'd be, you know, on the downhill slide. But as you know, the thing has changed and morphed multiple times over the last several months. And so here we are, and it's just constantly changing. So since the last time I was here, which I believe was in July, there's been some FAQs issue that we can talk about. We'll talk about some stuff you may be seeing in the news. Just a general update on what's happened since the last time I was here. So if you weren't able to be to some of the previous presentations, like Robert said, they are archived. You can get to them. And if you kind of start at the beginning and you'd work your way through them, you'd kind of see how the program has changed and maybe morphed and what all the rules are now. Because it's definitely not the same animal that it was on March 26th. One thing to keep in mind because of that is that what you hear today is in effect as of today. So if there's legislative changes after this, if there's FAQs after this, you know, that may affect what you see here today and what you hear today. So keep that in mind, that as a constantly changing program, you always need to know the context of what you learned and when. We're going to touch on these items today. GAP, which I'll tell you what that is if you don't even know what that is. Some of the FAQs that came out, taxes, I know that's relevant to all of you. Some best practices, and I'm definitely going to keep some time open at the end for Q&A because I know a lot of you always have a lot of questions. And so I'm not going to answer Q&A throughout just because it's honestly hard for me to talk and read the Q&A at the same time. But there will be time at the end. So as you go along, please feel free to post in that Q&A box. Okay, so GAP, when is it income? So if you don't even know what GAP is, that's okay. GAP is U.S. Generally Accepted Accounting Principles. And it is a set of accounting standards that is used by lenders, or it's used by companies that have to report in accordance with GAAP for different entities. The most common one that you might find yourself in someday if you're not there right now is you go to the bank for a line of credit or a loan on an equipment or a building or whatever, and it's going to be a business loan. And they say, okay, well, we would like a full set of financial statements in accordance with GAAP. So that's kind of a whole different level of reporting than, say, printing a balance sheet and income statement out of QuickBooks. And so I know not everyone on this call this is applicable for you, so I'm just going to touch on it. So those of you that it is applicable for, you'll know that this is out there. If you go to this website, the AICPA, which is the American Institute of CPAs, has a lot of resources during this COVID period. And this particular link addresses the specific accounting and reporting resources. So not only talking about PPP loans and how to account for them, but also leases. I know many of you may have gotten some lease extensions, or maybe your landlords gave you a rent break for a certain number of months. There are specific accounting rules for that if you're subject to US GAAP. So, you know, you have to kind of reassess the time of your lease. And anyway, it's a whole different accounting mess. There's information out about that. Subsequent events, you know, what is happening, what's changing, use of estimates, all those things. If that applies to you, this is out there, and I recommend you check that out. Okay, so under GAAP, just briefly, how do you account for the PPP loan on your books if you're under the GAAP model? There's currently 4 options, which I personally think is ridiculous, that they can't just come out and say, okay, everybody should do this, because I think it lends to more comparability between businesses if GAAP has one way. But for now, they've come out with 4 ways. We kind of like the PPP model. We're hoping the SBA comes out with more clarity. We're kind of hoping that the governing accounting gods come out with a more clarified, yes, you should all do this. So these are the 4 choices. The one that I believe we're going to recommend to our clients is the debt model, which basically says you keep it on your books as a loan until you actually receive forgiveness from the SBA. And as soon as the SBA forgives your loan, then you move that loan from the balance sheet, excuse me, to the income statement as an other income line, separate from your regular revenue source. So, but there are, and you can, on that previous slide, you can read about these 4 options if you're in this situation. But I just want to let you all know that that is out there. Okay, let's talk about the knowns versus the unknowns. So the FAQ came out on August 4th, and it's specifically called Loan Forgiveness FAQs. And this is the link if you want to read through all of them. It's a pretty easy read. The good thing about the SBA, they have done in the FAQs is make them pretty easy to understand. So if you want to read all of them, those are out there. The one thing that's still not clear, and I know I talked about this before, is the whole concept of FTEs. So as you know, when you're looking at forgiveness, you have to compute your FTEs during the covered period, whether you pick the 8 weeks or the 24 weeks, and you compare that to your base period, right? The base period 1 being in 2019 and base period 2 being in 2020. So the question is, how does that math work if you're going to apply for forgiveness before the end of 24 weeks? If you're able to use the 8-week program, everyone who's stuck on the 24, excuse me, is jealous, because the 8-week program, it's simple, it's got a distinct endpoint, it's done. It's much easier to fill out the forgiveness application if you're on that 8-week period. If you have to use the 24, which a lot of businesses do because they just weren't able to spend all the money in 8 weeks, the 24-week program is out there, which is great, but there's no real guidance on how you fill out the forgiveness application if you spent all the money before you get to 24 weeks. So let's say you're at week 12, you've spent all the money as prescribed. How do you fill out the forgiveness application? There's no guidance on that. Secretary Mnuchin has made it really clear when he testified before the Senate Small Business Committee that businesses should apply for forgiveness as soon as the money is spent, meaning the SBA doesn't want everyone to wait until the end of 24 weeks, because that, one, pushes the timeline really far out, and then 2, it's going to be a, kind of like everyone trying to get into Disneyland when the doors open. So it benefits the SBA, it benefits the lenders, and it benefits the borrowers if you're able to apply for forgiveness whenever you spend the money, right? So then they have a stream of applications coming in as opposed to all the applications coming in right at one time. But they haven't given us any guidance on how to do that. How do you fill out the application? How many weeks should you include? Do you just include where you spent the money? Do you go an extra couple weeks? And then how do you compute FTEs? And we're kind of referring to this as transition guidance. And so you'll see that maybe in another slide or two, where, how do you do the paperwork when you're in between? And specifically with respect to FTEs, it seems logical to us that once the PPP funds are spent, you don't have to maintain that FTE count, right? Because I know some of you have been trying to maintain your FTE count because you don't want your forgiveness reduced. But once the PPP money is gone, maybe you really can't afford to do that anymore. It doesn't make business sense for you to keep all of those employees. So the question becomes, do they expect you to maintain your FTE count for 24 weeks when realistically the money is gone after week 12 or week 14 or whatever? So, but that, like I said, item 1 is what seems logical to us. But as you know, the government isn't necessarily always logical. And they haven't come out with any transition guidance that basically says, okay, if you do this, here's how you do it. And that's what we're waiting on. So what should you do? Our advice is to wait for that transition guidance if you do have an FTE issue and you're not sure, because the money at stake can be significant for you. But one thing we are definitely sure about is that we're saying, don't wait to let people go while you're waiting for transition guidance. You still need to make really good business decisions for your business based on what makes sense for you, regardless of what the SBA is saying about forgiveness, right? So don't just hang on to your employees because you're worried about this FTE guidance. Do what makes sense. Ignore all this other stuff. Do what makes sense. So mathematically, the way the instructions are written right now, if you're able to include and report 24 weeks of costs, which is the way the application is written, even if you do have an FTE reduction, you should mathematically still get to forgiveness. And I have this little bottom line here. It says excluding the effects of an EIDL grant. Here's what that means. And I presented this previously. So if you have an EIDL grant, and the grant is the program that was offered at the very beginning back in April, and you went on and you filled out a really short application, and basically they gave you $1,000 per employee up to a maximum of $10,000. And that was the EIDL grant program. I'm not talking about an EIDL loan. Those are something completely separate. And the emails about that, if you got an email about that, you'll remember it came out in May, maybe early June. I forget the timing. But the email almost looked fake because it had a little sliding bar where you could choose how much loan you wanted. It was between 0 and 150,000. I know I had several clients email me and say, is this legitimate? It looks kind of weird. And it was legitimate, and that was kind of the first step if you wanted an EIDL loan. But what we're talking about here is an EIDL grant. So if you got a grant of $10,000, even if you spend all your PPP money and you would otherwise get 100% forgiveness, your forgiveness amount is going to be reduced by the amount of the EIDL grant. Okay, so let's say you got a $100,000 loan and a $10,000 EIDL grant. You received $110,000 from the government, right? Your PPP loan forgiveness is going to be $90,000 because it's your PPP loan minus the EIDL grant. So that's just something to keep in mind, that at the end there's kind of this little haircut if you got the EIDL grant. So that's what that means. Okay, so here's my example. Let's say you got a $250,000 PPP loan. And a business who received a PPP loan of that size would have had $100,000 of average payroll costs per month in 2019. Because if you remember, the formula was calculate your average payroll and multiply it by 2.5. So let's say in 2020, during your covered period, you have a 20% reduction in your workforce. So now your payroll is only $80,000 per month. Okay. So $80,000 times 6 months, which is the equivalent of 24 weeks, is $480,000. You multiply by 80% to reflect your FTE reduction, you end up with $384,000 of allowable payroll costs based on the way the application is written today. So you had a loan amount of $250,000. So even by using the reduced amount of payroll and taking the FTE reduction, you still end up with 100% forgiveness minus the effects of the EIDL grant, even if we didn't include any non-payroll costs. So you see in this example, I didn't even include rent or utilities or any of the other things that are allowed under the program. So mathematically, it works right now. It just depends, if they come out with transition guidance that says you're supposed to do something different, but it may still work out for you, even if you did have an FTE reduction. Okay, so that's why the transition guidance is so important, is basically to make sure we're doing the math correctly if you are on the 24-week program. Because like I said, the 8-week program is easy. That's simple. It's already done. Okay, so let's talk about owner compensation. So if you listen to the presentation I gave the last time I was on here, we talked about owner compensation, and they had just issued an interim final rule. And the way that interim final rule was written was very confusing. And so in that IFR, it inferred that when you calculated owner compensation, you had to add up wages, retirement contribution, and health insurance. And most everyone interpreted it that way, and it was very detrimental to businesses, especially businesses who have multiple owners. Like, let's say you're, in a personal service corp and you have like 10 owners in an S corp or whatever. That could be very detrimental to your computations. When they came out with the FAQ on August 4th, they clarified that when we're talking about owner compensation, we're talking about just wages. So for an S corp owner, that's just your wages, not your distributions, just your wages, the part that's going to end up on your W-2 that goes through payroll. And so when you're looking at the limitations on owner's compensation, you would just look at wages. So that was a really important clarification that was very beneficial to a lot of businesses that have several highly compensated owners. That same FAQ clarified that the maximum amount of retirement contribution for an owner cannot exceed 2.5/12 of the 2019 contribution if you're using the 24-week period. So what does that mean? That means that in order to calculate what's allowable for the owner's contribution, retirement contribution during the covered period, you have to go back and look at what was the owner's contribution in 2019. So if for 2019, the owner's contribution was, let's say, $10,000. So during the covered period, the most you can claim for that particular owner is, I should have done the math beforehand, divided by 12 times 2.5, 2,083. So I think what they're trying to do with that is make sure that, with a lot of retirement plans, you can kind of work through and push a lot of contribution towards the owner, especially if you have a cash balance plan or a traditional defined benefit plan. You can really skew the contributions in favor of the owner, depending on certain assumptions that you make. So I think what they're trying to do here is make sure that people don't try to work the system to get more retirement contributions in for the owners in 2020 and do it at, say, a higher level than they ever have before, because that's not fair. So the second thing is that employer paid health insurance premiums for owners in an S corp are not allowable costs. So when you're looking at your allowable health insurance premiums, you can include all the employer paid health insurance premiums for your employees, but in an S corp, you cannot include that same cost for the owners. And the logic behind that is that at the end of the year, the employer paid health insurance premiums for an S corp owner get added to the W-2. And so what they're saying is that because under tax law, those get added to the W-2, they become wages, and we've already given you a limit on wages. So it's kind of just a quirk for an S corp. If you're a C corp, then that restriction doesn't apply to you. For an owner, you can include wages, retirement, and health insurance. The last time we talked, I also, we weren't sure what the definition of owner was, because it can make a significant difference if you have some really, fractional share owners that you're dealing with. And so the definition they came out with, which I just find comical, is an owner employee is an owner who is also an employee. So that's kind of like a big fat duh, right? That's not what we were looking for. We were hoping there was some sort of, de minimis ownership percentage that might apply. Like, in terms of this definition, we're only talking about, more than 2% owners or more than 10% owners. Because if you remember on the original application for when you were signing to get a PPP loan, I believe it was only owners with more than 10 or 20%. It's been too long. I think 20% maybe had to sign the application, right? So we were kind of looking for some sort of similar interpretation on the back end, but they didn't give us one. So anyone who is an employee, gets a W-2, who also has any ownership, is considered an owner for purposes of all these definitions. And it's critical to make that distinction because, you know, owners are not included in your FTE count. So when you're computing your FTE numbers for your base period and your covered period, you don't include owners. So it's important that you make sure you know who your owners are. And for most small businesses, this is really not a big issue. But for some of the larger companies that maybe have stock-based compensation, where they give their employees stock ownership over time as an incentive because they can't really pay them a lot of wages right now, you end up with a lot of employees who have fractional ownership of your company. So that's when it can make a huge difference. The last thing I want to point out, because sometimes a lot of small business owners have multiple businesses, the FAQ clarified that the owner restriction, the owner limitations, which is $20,833 if you're filing on the 24-week program, you have to apply that in total across all businesses. So let's say Robert, he works at Arizona Commerce Authority, but on the side he has 3 businesses. He has a dog walking business, you know, he owns a CrossFit studio, and then, I don't know, what else you have a bagel place. So Robert has 3 businesses, and all 3 of those businesses got a PPP loan. So assuming all of Robert's businesses make a ton of money, you know, he just works at Arizona Commerce Authority for fun, then, you know, mathematically it looks like he could get $20,833 for each one of those businesses, right? Well, the FAQ clarified that no, for an owner, the $20,833 limitation is in total across all businesses. So when Robert's preparing his forgiveness application, you know, he would have to split up the $20,833 across the 3 businesses. So he'd have to allocate maybe $5,000 of the dog walking business, another $5,000 of the CrossFit studio, and then the remaining $10,833 to the bagel joint. So that's something to keep in mind if you have multiple businesses that all received a PPP loan. All right. Another unknown that's out there is with respect to the compensation limits on payroll. The owner compensation limit I've been talking about is $15,385 for 8 weeks, $28,33 for 24 weeks. Is it a cliff? Meaning, you know, 8 weeks is obviously $15,385, and you're allowed $20,000 over the 24 weeks. If you report 10 weeks, if you report 10 weeks of payroll, is your limitation still $20,833? Or is there some sort of proration? You know, because the difference between the 2 numbers isn't that significant, we're thinking maybe it's a cliff. But again, there's no guidance out there on what your limits are when you file for forgiveness before the end of 24 weeks. As far as the employee compensation limits, that seems easier to us. The limits are $15,385 for 8 weeks and $46,154 for 24 weeks. Now, a cliff seems illogical, right? A proration makes more sense. So if you look at it, it's $1,923 for each week of payroll you're going to include. So if you're going to include 10 weeks of payroll, you know, the max amount you can include for any employee is $19,230. So those are 2 questions that can be critical depending on, you know, how many highly compensated employees you have, not knowing what the maximum is that you should include for them. Okay, let's talk about costs. So in the original CARES Act, there's this item called transportation utility, and nobody knew what that was. But there was an interim final rule that was issued on April 14th, and it was specifically targeted at sole proprietorships. It was talking about how a sole proprietor should compute their loan amount, and then it also gave some insight into how a sole proprietor would report costs in order to get forgiveness. And in that list, it said, and I'm kind of sort of quoting here, it said, for example, the fuel for your business vehicle, or it actually used the word gas. It said gas for your business vehicle, meaning let's say you have a delivery business and you have a van and you fill it up with gas, right? So from that little excerpt, it was kind of the only thing we had that may be linked to what is a transportation utility. So kind of for the last 4 or 5 months, everyone's been saying, okay, well, when they said transportation utility, they must have meant gas because that's what they talked about in the IFR. Well, when they came out with the FAQ, they did a separate little FAQ that just said, here's what a transportation utility is. It's for the distribution and fees assessed by state and local governments. So I don't really know what that means either. I'm guessing it's some sort of component of your electric bill, right? Because your electric bill has all those different line items. So this didn't really seem to link to the fuel, but we still have that interim final rule out there that talks about fuel. So right now, I'd say fuel is a maybe item. But depending on how liberally they give us some definitions on the 24 weeks, then, you know, you may not need to report fuel. You can report more payroll costs and still get to forgiveness. So, you know, kind of put fuel on the maybe list, and then as we get more guidance, maybe you just won't need it. Retirement, this is a really tough one because retirement costs are funny. It's not something like your electric bill that you necessarily pay every month, right? A lot of small businesses, if you have a retirement plan, most of the time you get to the end of the year, right? You see how the business did, how much money did we make, what is our cash flow like, and then you determine how much you think you can put into your retirement plan. And then, so if we're talking about 2019 here, so you go through 2019 and then sometime before your tax extension is due, you decide, okay, I think I can put this much money into the retirement plan. And then you have until, you know, the extended due date of your tax return, if you file an extension, in order to actually put the money in the plan. So for most of you, that's September 15th. So it's a huge lag between the cost and the year it's attached to and when it's actually paid. So, and even large businesses, you know, they have this situation also because they may not contribute the match or the profit sharing until the extended due date of the tax return. So you kind of have to assess how your pattern of how you normally do retirement costs and follow that same pattern is basically what we're saying. You know, don't try to escalate your 2020 costs into the covered period. In the FAQ, it talks about accelerating costs. We think that's what they're talking about, you know, trying to really hammer costs that you normally would pay later into the covered period. I don't think that's what they want. So you kind of have 3 options for costs. 2020 costs that were incurred and paid when due. But like I said, that gets dicey, right? Because the 2020 cost you might not even determine until early 2021, and then you're not going to pay it until September of 2021. That one's tough. 2020 costs incurred and paid within the covered period. You know, what does that mean? It's like if you have a company and you have a 401k match and you actually make that match every pay period. So let's say you have a 3% match, and every time you make payroll, you put money into the plan. Every time you make payroll, put money into the plan. That's actually pretty simple, right? Because it's easy to see you're incurring it, it's linked to payroll, and you're actually putting it in the plan consistently. The last option is, you know, your 2019 accrued costs that maybe you paid within the covered period. So you kind of just have to look at how you do your retirement cost and figure out what makes the most sense. But still really no guidance on which one of these is correct, or is there a limit? Can you take the whole 2019 accrual? There's no guidance on that. So work with your CPA if you have one and try to come up with something that makes sense. Okay, taxes and tax returns, everyone's favorite topic and the most unclear. So as of today, the forgiven portion of the loan is not taxable, and the expenses for which the PPP money was used are not deductible. So I have $100,000, I used it for payroll. So now I have $100,000 that's not going to be taxable, and I have $100,000 of expenses that are not deductible. So what happens if those expenses hit in one tax year and loan forgiveness comes in another, right? Because this loan forgiveness is just like any other cancellation of debt. So our expectation is that whenever the SBA finally forgives your loan, you're going to get a 1099-C, cancellation of indebtedness income. You know, and what year is that going to be in? Is that going to be in 2020 or is that going to be in 2021? No one knows. There has been legislation introduced to make the expenses deductible. And if you Google it, and that's actually this topic has been in the news a lot in the last couple of weeks. You know, no one likes the way it is now. Congress doesn't like it. Businesses don't like it. It seems kind of like unfair because basically the government's going to recoup in a lot of scenarios 20 to 30% of the PPP loan by making this tax situation the way it is. So here are things that we don't know. What's the impact of having non-deductible payroll on your R&D credit or your QBI? So, you know, a lot of you might be in industries where you do R&D credits and you're doing innovative things and you're taking those credits. Technically, payroll that's non-deductible is not eligible for the R&D credit. Well, that doesn't seem really fair because you had the payroll, right? You expended it. How do you project your taxable income and do your quarterly estimates? You know, if you're a small business owner and you're doing a Schedule C and you normally pay quarterly, you know, under this scenario, you're going to pay more quarterly than you would if the loan was non-taxable and the expenses were deductible. And then if you're a fiscal year filer, meaning I talked to a client last week, their year end is July 31st. So their costs all hit in fiscal year 2020 and their, you know, their tax return extension is due October 15th, I believe. You know, how do they compute their extension payment? Should they do it the way it is now and pay more tax in, or should they assume that Congress is going to fix it and they'll have to pay less tax? So it's a lot to decide. So if you are a fiscal year filer, consider an extension. Buy yourself some time until hopefully Congress gets this worked out. Even if you're not and you're computing and paying taxes quarterly, you know, maybe you compute it both ways, and then as a business owner, you have to decide which one you want to do. It's not really your CPA's job to tell you what to do. I think it's your CPA's job to say, okay, if you do this, here's how much you'll pay. If you do this, here's how much you'll pay. And these are the consequences of each decision. You know, if you pay less tax than you have due, then you're going to have, you know, underpayment penalties and interest. Here's what those rates are. Here's what you can expect. And then as a business owner, you just have to make that decision and decide what you think you should do. So hopefully they'll figure this out and give us some new legislation soon. But right now they just seem to be fighting a lot. So, but definitely, hopefully by the end of the tax year, because otherwise it's going to be really challenging. Okay, best practices, and we'll get through these pretty quickly so we can roll into Q&A. If your loan is less than $150,000, I would consider waiting to apply for forgiveness. There's some proposed legislation out there that would reduce the forgiveness paperwork required for loans of this size. And everyone is on board. Congress is on board because they don't want to put a big paperwork burden on small businesses. The lenders are on board because if they use this threshold for $150,000, that will cover 85% of the PPP loans that are out there. So if you're a lender, right, you already are not really excited about having to review forgiveness applications, and you know that there's legislation out there that could potentially reduce 85% of your work, of course you're going to be on board, right? And then as a borrower, you know, definitely you're on board because the less you have to do, the better. So I know right now what they're trying to work through is how to gather enough information that they could detect fraud, because Congress is really worried about fraud with this program. If you watch the news, just Google it. You can find lots of people who have taken advantage of the program. They have submitted applications that were based on false information, and they've received lots of money that they don't deserve. And so Congress is really worried about that. So they're trying to balance reducing the paperwork for these really small businesses while at the same time making sure they detect any fraud that's out there. So that's why there's not a lot of specifics, but we've got time. You have 10 months to apply for forgiveness. So there's plenty of time if you want to take a wait and see approach and maybe wait and see what happens, and so you can have to do less work, but just keep that in mind. So in general, we're telling our clients, just don't rush to apply. I know I have one client that even though I told them not to rush to apply, they already rushed and they applied for forgiveness because they just want to be done, right? And I totally understand that. And I'm sure a lot of you feel exactly the same way. You know, you just want to be done. You want to move past it. You want to get on with your life. I get it. But at the same time, with some of these questions that are still out there, we think that it just makes the most sense to kind of just hang back and wait so that they can get it all figured out. In the meantime, stay in touch with your lender so that they know that you know what you're doing. If they ask, why haven't you applied for forgiveness? You know, I have these issues, or my loan's under 150. I'm waiting to see if they reduce the paperwork on me. But stay in touch with your lender so you kind of know what their program is and what they're expecting from you. Okay, this is kind of just a last little item. So, here's how it came up. So this is not something that I've necessarily seen in any of the classes that I've attended, the other webinars, or anything I've read. This came up yesterday at my daughter's softball practice. So, you know, one person on her team is a vice president at a large bank, and then another person's mom is a project manager. And we were talking about it, and one of them said to me, you know, what we came across this past week is that we had a customer and they want to sell their business. And so we reached out to the SBA and said, hey, you know, what's the implications here? And of course, there's no guidance, right? There's no specific guidance. But depending on how your loan documents are written, and so you really need to look at your loan documents. If you're going to sell your business or buy a new business or whatever, it could be considered a default on the PPP loan. And the reason they're saying that is the SBA, when they came out with all the documents at the very beginning, this is back in the last week of March, they gave sample documents for lenders to use. Now, not all the lenders use the sample documents. Some of the lenders use their existing loan templates. But in the SBA version, you can see it talks about that the borrower will be in default if it reorganizes, merges, consolidates, or otherwise changes ownership or business structure without the lender's prior written consent. So I just want to kind of draw your attention to this in case you are considering either selling your business or buying another business that received a PPP loan, that there could be some issues with that. And so if you're in that situation, you know, you should talk to your lender and maybe an attorney, just to make sure you cover all your bases, because I think the last thing anyone would want is a transaction to put you in a situation where you're no longer eligible for forgiveness. So just, I Googled it this morning, excuse me. You know, we talked about it yesterday and I was kind of surprised, and then I thought about it and I'm like, well, you know, if I just had a regular business loan, and I wanted to sell my business, I'd have to get my lender on board, right? Because I'm signed up for this loan. I'm going to be transferring ownership. There's a lot of things with that. And the lender kind of has to be okay with what's happening here. And so I don't know that this should be any different. It's just something no one had really thought about. So anyway, I was doing some Googling this morning. I read some articles posted by some attorneys, and they kind of seem to are on board with the fact that nobody knows for sure, but it could be an issue. So I just bring it up so that if you're in this situation, you know, don't just do the transaction and worry about PPP later. You probably need to think about it while you're doing the transaction. Okay, so now we're going to roll into Q&A, and I'm going to go through the questions that are in the Q&A panel. So if you want, you can kind of follow along. Okay, can you elaborate on the FTE safe harbor if you restore your FTEs by December 31st? This means that if my FTEs are fully restored in the pay period that includes December 31st, I qualify. So the answer to that is yes. And actually, if you look at the forgiveness application, I believe in that FTE safe harbor paragraph, I don't know that I have that. Maybe I do, hold on. Sorry, I keep some of my most important things on the floor, but because there's no room on my desk. But I think if you read in that FTE safe harbor, now these are the instructions for the EZ form, but I think it actually says when you're calculating the FTE safe harbor, it talks about as of December 31st or the date you file this application, which is kind of a weird little sentence at the end of that. But I believe that's the expectation, that if you restore your FTEs to whatever they were as of February 15th, by December 31st, then if you had an FTE reduction, it doesn't get counted against you. So you're not going to have that reduction like I talked about earlier. So that is correct. But look at those instructions for the forgiveness application, and I have those handy. Oh, they're there. I believe it's on page, let's see, safe harbor. Yeah, I'm not really sure. Anyway, check that day, because I know it says December 31st, but there's some places in here where it also refers to the date this application is submitted, which means if that's true, then you would have to restore them by the time you submit for forgiveness. But I think it's an or. I don't think it's an and. So anyway, that is correct. Okay. I run an S Corp, and if a forgiven PPP loan is recorded as other income, this affects net income and tax liability, blah, blah, blah. Okay, so I think we went through the taxability right now. And so the answer to this question is yes. I mean, the way it is right now is the PPP loan is not taxable, but the expenses you spent it on are not deductible. So if you think through the backwards logic of that, it's the equivalent of saying the PPP loan is taxable and the PPP expenses are deductible, because you get to the same answer. So, you know, we kind of talked about it on that slide. You have to really look at what you want to do as a business owner. Do you want to risk it and hope that they change the rules before you file your tax return? Or do you want to take a really conservative approach and say, no, I'm going to go ahead and pay in, because you're an S Corp, right? So you're going to be paying taxes in individually as S Corp owners. You know, do you want to pay in a little extra on the chance that they don't fix it before your tax return is due? Okay. Regarding employee owners, if the stock is actually owned by a family trust, is the employee considered an employee, or is he, she'll? Oh, that's an excellent question. So I do know that if you have an ESOP, I know this is not the question, but if the stock is owned by an ESOP and you are a participant in the ESOP, those rules don't attribute. So like in that case, all your employees would be owners, and that would not count. So if you're in a situation where you have an ESOP, the ESOP owns the shares, that's not attributed to any employee. But I hadn't really thought about this one where it's owned by a family trust, and whether or not, I'm assuming the beneficiaries of the family trust might be employees. That's a really good question, and there's no guidance on that. That's an excellent question. If you want to email me separately, we could talk about it, but I honestly don't know the answer to that, and I'm 100% certain there's no guidance on that. So it might be a scenario where you just look at, you know, do you need them to be owners to get forgiveness, or if you report them as employees, do you still get to forgiveness, and just look how that shakes out. Or maybe even ask your lender, because each lender kind of has their own interpretations of all these FAQs. So why don't you run that by your lender and see what your lender has to say, if their expectation is they would be reported as owners or not. When does the 10 months start? I believe the 10 months starts as of the date you received your loan. So for a lot of you, that's in April. So if you got your loan in April, 10 months you would have until February, right? So that's still a long time out. I can double check that. It's not on the application because it was in one of the, either in the FAQ or something that came out since then. So when you look at it, the application, it's not apparent. I don't think that you have 10 months. copy of the slide deck. So after this, I will give a PDF of the slide deck to Robert. And I believe, I don't know, I believe Robert sends those out. He can chime in if I'm wrong.
Yeah, we will post that on our website, on the bootcamp website under the session. The slide deck will be posted there along with the recording of this session.
Okay, great. What if you change the name of your business? So I know that the PPP application and the loan and everything, it is tied to the name of your business, but it's also tied to your EIN, your employee identification number or employer identification number. So I think as long as you didn't change your EIN, I think you would be okay. If you have a situation where you change the name and you changed your EIN, then I think you need to consult with your lender and find out what their expectation is, because you want to make sure that's all matching up in the SBA system, because in their system, they have your original application with your EIN. So we want to make sure you report for forgiveness with that same EIN. So hopefully you didn't change your EIN, just your business name. Okay, does the 10-month application apply to the loan date? I believe it's the 10 months from the loan date. I wish I had that super handy. It's one of those things that I know and then I forget when I'm asked specifically. I will, Robert, do you know that exactly, or could you Google that while I talk?
I don't, I'll look it up.
Okay. What does FTE stand for? Okay, full-time equivalents. So there's a requirement of the program that you try to maintain your full-time equivalents. So the way full-time equivalence works is that you look at how many hours per week someone works. So like if I work 30 hours per week, I'm a 0.75 FTE, okay? And then under the program, you round up to the nearest tenths, I'm actually a 0.8. And it's all compared to a 40-hour work week. That's the denominator. So like if Robert works 50 hours a week, he's still a 1.0 because you can't be more than one person. If you work 20 hours a week, you're a 0.5. So when you're looking at your employee base, you have to look at what is the full-time equivalent of each employee over that covered period. And if you look at the instructions on, let's see, the instructions for the main application, not the EZ application, the math for how to compute hours is on, how to compute your average FTE is on page 4. It's about a third of the way down the page. It's called average FTE. And it tells you that you basically add up the hours over the covered period, divide by 40, and then you look to see what the FTE is for each person. So that's on, like I said, page 4 of the application instructions. Could waiting until January 1 possibly be a good tax planning technique if expenses remain non-deductible? That's an excellent question, and no one knows the answer to that. I know our tax department is trying to work through that right now because we have a lot of fiscal year filers, like I talked about, that have the May 30, June 30, May 31st, June 30, or July 31st year end. And right now they're working on their extension because they're definitely going to file an extension for them. So, but I was a part of an exchange between a lot of really smart tax people, because I'm admittedly not a tax person. They shared an email exchange with me last week, and there are some really, really smart tax people in the United States, and none of them knows the answer. And that's what they're trying to get to too, right? Is should they tell their clients to wait for 2021 for forgiveness? And the answer is they don't know. That's why they're hoping the question gets answered soon so that everyone knows what to do. Because no one knows if you should wait or if you should go ahead and try to get forgiveness in 2020, if you're calendar year. So excellent question. No one knows the answer, sorry. Does the PPP have any blue sky laws? I don't think so. So it's all tied to actual stock ownership. So if you're just an advisor or an outside director, there's nowhere I've seen either in the PPP application or in the forgiveness instructions that you would have to sign or be disclosed. Now, if it's on a public company, I certainly do not know the answer to that, but there haven't been a lot of public companies that have been eligible for a PPP loan just because of the size restrictions, but mostly it just talks about stock ownership and attribution based on stock ownership. So if you don't have stock ownership, you're probably okay. if you're a partnership and you take guaranteed payments as wages, does that count as distribution, meaning that it cannot be? Okay, so there's special rules for partnerships. So your forgiveness is actually a formula. And if you look in the forgiveness instructions, it tells you what the formula is. For a partner, your forgiveness is based on your 2019 K1. So you're supposed to take K1 line 14A, and then there's a couple adjustments, and then multiply that by a ratio, and that's your base number for forgiveness. And then whatever guaranteed payments you take during the covered period, you compare to that number and you take the smaller of the two. So if your 2019 Schedule K1 line 14A times the ratio is $10,000, then, and you pay yourself $20,000 in guaranteed payments during the covered period, you can still only include $10,000 in your forgiveness. So look in those instructions and look at the FAQ loan forgiveness for partnerships, and it walks you through exactly what you get as far as forgiveness. Let's see, I posted my payroll. Yeah.
I found that answer. So on the PPP loan forgiveness FAQs, there's a question. This is on the SBA's website. And it says, if a borrower submits a timely loan forgiveness application, does the borrower have to make any payments on his loan prior to the SBA remitting the forgiveness? It says, as long as the borrower submits its loan forgiveness application within 10 months of the completion of the covered period.
Oh, okay.
So whether that's the 8-week or the 24-week period.
Okay.
So it's 10 months upon completion of that covered period.
Okay, good. So that's actually more generous. That gives you, I mean, that's like, oh my gosh, if you got your loan in April and your covered period is going to end in October, you're looking at August of 2021 to you have to file your application. So there's tons of time. So that's good. Thank you for looking that up. Okay. I've been posting my payroll expenses normally each period. Should I be posting them to a PPP expense account? I'd say no. As an auditor, which is what I do in my spare time when I'm not learning about PPP, you know, I prefer people post their expenses to their normal accounts because that gives you comparability. Because as a business owner, I know that you're looking at, okay, what was my payroll expenses in 19? What are they in 20? And you're budgeting for 2021, right? So if you start moving all your stuff around, it just makes it really hard to manage because then you don't know what your profitability ratios are. You don't know how much you're spending on payroll. You have to do a lot more work to get that. So I've been saying just keep posting the way you normally do and let all this PPP accounting be kind of separate on the forgiveness application and not necessarily in your accounting records. But that's my personal preference. There's certainly no harm in doing that, but my preference is to just keep doing the things the way you normally do them. Where can I find the unique rules for a new business that started in mid-2019? So if you started in mid-2019, I think the answer is you would look at your base period as being the 2020, but then I'm not exactly sure if they've addressed that very specifically. There might be an interim final rule out there that talks about how you have to reduce all of, or how you compute all of the limitations when you weren't in business the whole time. So if you went to the SBA website and looked at that, there might be an interim final rule that talks about that, but I don't know that I could get my hands on it quick enough for you. Okay, I think I covered all the Q&A, right?
Yep, looks like you got them all there.
Okay.
Right on time.
1 minute to spare.
So Carrie Ann, what the final comments do you want to share as we wrap up?
I guess my final comments are just to try to be patient, which I know is really hard because everyone wants to be done. I mean, I personally, I have a lot of other things I could be doing because, you know, we have other work that we're doing and you know, the fact that it's dragging on and on, I think causes exhaustion for a lot of people. But with so many unknowns that are still out there, just be okay with the fact that if you're not ready to apply for forgiveness, or if you just want to wait it out, that's okay. And if you actually ask a lot of lenders, they're recommending the same thing, just to kind of wait it out until everyone knows what the rules are, so that when you do apply for forgiveness, you're doing so with confidence, because you already know what all the rules are, and you don't have to be worried about, well, you know, I might get through my lender, but the SBA might not like it. So I just think it's okay to be patient and to wait it out, and wait until the time is right for you to apply for forgiveness.
Excellent. Thank you, Carrie Ann. We appreciate you being on today with
You're welcome.
this session. We appreciate your knowledge and expertise and willingness to share your time.
You bet.
Again, this session is being recorded and will be posted on our website along with a PDF version of the slide deck, so you can access that. It'll be posted later today. We also want to remind everybody tomorrow's session is the ABCs of Starting Business, Part 2. We're going to touch on the business canvas model. We've got representatives from SCORE, which is a nationwide program funded by the SBA. And the SCORE Phoenix chapter is presenting that session. It's going to be a very good session. So please register and join us tomorrow morning at 9 a.m. And with that, we will let everybody go. We want to say thank you and have a great day.
Thanks.